decarbonisation journey. My name is Michelle Meinecker. I'm the Director of the Energy Transition Dialogues at Gulf Intelligence, and I'm delighted to have three excellent speakers with me today. But before we delve into the main topic of the day, which is big oil's crunch, now what? I'm going to ask each of the speakers to give their opinion on the list of stories, which should be showing on your screen just about now. These are some of the key stories from the last week. Obviously, with the headlines always being so busy, trying to distill them down to 10 is pretty tricky, but we've given it a shot. First up, I'd like to welcome Faris Al-Karisi. He is the Principal Business Transformation Lead at Petroleum Development Oman, more commonly known as PDO. Faris, welcome. Can you let us know which story jumps out to you, please? Which one's flashing in neon lights for you?
Yeah, it doesn't jump out, but it does sort of reinforce what we're about to talk about is the CO2 levels reaching highest in 4 million years. So that's very concerning and just extra evidence that the topic we're about to talk about today is just center stage for all that, I guess, what we're going to be dealing with for the next 20, 30 years of our careers, pretty much.
We're seeing a lot more of these scary headlines coming out about rates of emissions, and obviously we had the dip last year by some estimates. Others said it wasn't quite as significant as we'd hoped, but there are varying estimates depending on which indicators you wish to follow. And so we're beginning to see more and more of these scary headlines coming out. Do you think that it's having the desired effect on the energy industry and in terms of a wake-up call?
Depends on where you sit. I think most of my colleagues, they're in their mid 30s to mid 40s. And if they're a petroleum engineer or a reservoir engineer, their feelings about those numbers are very different if you're a climate activist. And whenever I try to bridge that divide in those conversations, that uncertainty becomes less and less and less with all the mounting evidence we've been having since the early 80s, in fact. Since all the documents that Exxon and Shell have released over the last few years about their climate research in the early 80s. So I feel like it's still a very polarizing discussion sometimes, yeah.
That will be interesting. We'll talk more about that as we delve into the main topic, but the fact that it is still quite polarizing, as you very eloquently described, those two camps are still very distinct. It's quite worrying, perhaps. Next is Ian Munro. He is the Strategy Director at Rise Energy. Ian, welcome. And which story grabs your eye, please?
Thanks very much. I believe engine number one's sort of stake in the heart of Big Oil's boardroom last week was one of the key talking points for me. I mean, 10, 20, even 5 years ago, we wouldn't have imagined that climate change concerns could actually make a major impact in the shareholder debates. But as we see sort of public companies being run like democracies, every shareholder gets their own vote, and engine number one made theirs count by getting 3 board seats with the help of some big players, backing them. So that was extremely interesting.
It's also very, very relevant to our topic today of this crunch with big oil and this narrative that what is a nice to have, or we can opt in or we can opt out, or we can opt in as much as we like into the climate narrative and market it in a certain way, but we don't perhaps have to go the full hog for some entities. Now that's truly changing, and the scrutiny is intensifying hugely. I'd like to welcome back Nathan Wrench. He is the Head of Sustainability Innovation at Cambridge Consultants. Nathan, good to see you again. You know the drill. Which story jumps out to you, please?
Well, there's several here, but I suppose as a technologist, the thing that perhaps caught my eye was the deal between Trafigura and Yara, looking at the use of green ammonia. Hopefully, they're going to start with blue ammonia, but for the use in long haul shipping. This strikes me as sort of one of those interesting developments. There's a whole lot of assumptions going in to that deal about what the future of transportation is going to be as we try to decarbonize it. But that looked to me like one of those sort of key bets being placed by some big players there that I think is worth watching with interest.
Is that a situation of chicken and the egg, in the sense that you mentioned the assumptions that have to be made, and that making those assumptions and putting some weight behind them, and putting some weight behind the assumption that this market's going to grow accordingly and so on, is what is needed for investors to have growing faith in it, therefore helping the market grow? Is that? And
yeah, I think that's exactly right. That's the way to look at it. If you look at historical precedent, or the current amount of ammonia being made in the world, and where it comes from, and whether it makes sense as a fuel source, you have to make this leap of faith before you can actually then say, the world in the future could be different. If we are to eliminate fossil fuels from the supply chains, there are some genuinely difficult areas, and bulk shipping is one of those areas. Is it going to go pure hydrogen? Probably not. Could it go green ammonia? Maybe. Yeah, I think that's, I mean, compared to burning tar sands and some of the bulk of bunker fuels that you've seen being used at the present, definitely a better alternative. So one to watch.
The turbulence in the shipping industry coming up, hopefully positively disrupted, though of course there will be losers as well, is going to make the IMO's 2020 0.5% sulfur ruling down from 3.5% seem like child's play. And of course there's a huge amount. Right. there was a huge amount of negative feeling from that, and a huge amount of the narrative of this is a huge strain on us, look how much it's going to cost, this is happening too fast, even though of course it'd been on the cards for up to 8 years in advance, 2020 versus 2025, and this whole picture. But actually now, looking at the pace of change and the pressures coming towards the shipping industry, that's very much just one of the ingredients of this very big meal, essentially, that it's got to digest. So right, let's crack on with the key topic of the day: big oil's crunch. What's next? I'm just going to start off with a bit of background for everybody listening. 2 weeks ago today, I'm sure nobody missed it, there was a drum roll in big oil, followed by stunned silence for many, because a court in the Netherlands ruled in a landmark case that the oil giant Shell must reduce its emissions by 45% by 2030 on 2019 levels. Also, Shell's responsible for its own CO2 emissions and those of its suppliers. So why the audible gasps in the fossil fuel world and other sectors? Well, it's the first time that a company has been obliged to align its policies with climate accords, part of the climate agreement with Paris deal. And to top it off, it was one of the world's biggest companies, and it already has a climate agenda in place, though apparently that one wasn't good enough. So this is certainly a game changer when it comes to the level of scrutiny and accountability that big oil faces in the 2020s. And to be honest, the pace of change means we're not going to have to wait very long in the 2020s to see more of this scrutiny intensifying. We've already touched on it quite a bit with some of those stories, but Ian, I'd really like your opinion on what impact you think Shell's ruling is going to have on the ambition of other big energy players this year. Some are very ambitious already, others are less so. But when all of them are crafting and updating their climate agendas in what is a very fast-changing environment, Nathan just mentioned the rise of hydrogen and ammonia fuels and so on. That's just one area that's moving very quickly. What impact do you think Shell's ruling is going to have when they get their pen and paper out for their climate agendas?
Yeah, I mean, Shell's been adamant it's playing its part in tackling climate change, but it does have a position where they want to tackle green energy in a balanced way, so where supply and demand have to drop together so that they can reach their goals. The Dutch court said that that's essentially not good enough and held them, as accountable as essentially a country to the Paris Agreement. But I see this as being a bigger picture issue, not just for Shell, but for the other oil super majors, the public listed companies, where, like never before, these companies are under the societal pressure, the shareholder pressure, the government pressure to change, and that they'll have to do so, because it's not just enough that whether they want to do it or not, it's that they're being forced to do it, like the engine number one situation, like in Chevron changing its strategic sort of initiatives towards a greener future last week as well, which got largely brushed under the rug because of such major happenings in Shell and in Exxon. So how do you make these hardline strategic changes? Well, they can't be done instantly. They need, you know, how do you change an offshore oil and gas platform to a wind turbine overnight? You don't. So, you know, you need to create a culture and a physical change in these companies which only really know oil. So the challenges are going to be steep, and you know, the real way I only see these hurdles being you know, taken over is by you know, hardline investment making decisions as well in decarbonizing their current assets, but also in investing in new technologies, whether that's through venture or through large scale renewable energy projects.
And Nathan, do you think that this push and this pressure that Ian's mentioned and we've discussed, do you think that this is going to see us reading more in the headlines at the end of this year or perhaps next year about more ambitious climate targets from big energy than perhaps we would have seen before?
I think it could. Whether it will or not, it's one, unfortunately, for the lawyers and the politicians.
And the crystal balls.
Yeah. What's striking about both the Exxon and the Shell stories is that it's the first tentative step towards accountability. You know, the climate emergency is something that, you know, we've all contributed to greater or lesser degrees. We live in the world, we fuel our cars, we fly on holiday. But despite that, it is still a story with a villain in the piece. You know, the fossil fuel industry knew this was going to happen. They've known for 30 years and they have lied about it. And eventually, those lies are going to catch up with some senior executives. So I think that we will see pressure from the public, from some movements, to move beyond telling them to reduce their carbon emissions and to seek reparation. I think that we will, in the same way as the tobacco industry has been held to account for the fog, uncertainty and doubt that they created in using science in that industry to mislead the public. I think the same is possible for big oil, and we could be seeing the first cracks appearing in the wall of these empires that will suddenly crumble under the scale of reparation that is needed in order to fix this crisis.
Well, just talking about those cracks, and I would say that one of those cracks, or some of them, are the risk of stranded assets and how that is really intensifying. I'd like to come back to that in a second, because I'd like to bring the survey question up just after I've asked Faris's question about, from an NOC perspective in the Middle East, and how you think this feeds into perhaps NOCs re-examining their ambitions across the region and indeed across the world.
So to mirror what Ian said earlier, I believe there were other stories that were buried too. And one of the other ones was Chevron shareholders also voted to
same day
60% to cut down Scope 3 emissions too. So that all happened within 1 week's period of time or so, 10-day period of time. And back here, closer to home in the Middle East, if you are an Aramco or any other NOC in the region, I just use Aramco because it's very well known in the West, is if you have ambitions to partially privatize or publicly list, you have to consider that this is part of your calculus in the future of what the oversight that you might have to be dealing with. And that then factors in with, does that figure into your national strategy too? Because most of these, and PDO is a Shell JV, will have some component of that, you know, because it'll be very hard to diverge these strategies. Everybody will have to get on the same page one way or the other eventually. So, and in this region, what I've seen is a lot of people are now starting to take stock of their GHGs, their carbon footprint, which is a good first step, because before you can even address it, you need to measure it. But they need to quickly now move past that to the theoretical stage and put some concrete plans into place. Yeah.
Do you think we could see some partnerships breaking apart? So let's say you have a major energy player and it has its different partners and suppliers along its chain, and they're they're simply not playing ball. They're not moving fast enough. Perhaps it's their internal ethos, perhaps it's the economics, perhaps it's education, whatever the reason may be. Do you think that we could, in the next year or so, as this pressure builds on the top dogs, as it were, that those in their wider pack, if they aren't playing ball, that it's going to be a lot more brutal in terms of how quickly they are cut?
I mean, Nathan probably can speak to this a little bit better, but one thing that we noted over here quite closely was we were keeping track of senior leadership in Shell. Mm-hmm. And during Project Reshape, which was basically their sort of restructuring and of the organization recently, and we noticed that there were quite a few departures of individuals who had a very pro-climate agenda in their sort of strategic vision. And I think until that clarifies of what kind of organizations those IOCs are going to be, it's a little bit too early to tell here what happens. Yeah. So, but others have an.
That's very interesting. Thank you, Faris. Let's bring up the survey question, please. It's a very easy one to go with. It's a quick yes or no. It's not overly complex. We like to keep it simple, keep it quick. So the majority of oil majors are at the losing end of rising pressure from climate activists and investors. Agree or disagree? I suspect we can probably guess the answer to that quite easily from today's conversation so far. But if you just give a quick agree or disagree, and we'll return to that in the next 2 or 3 minutes. Just moving on to technology, Nathan, I'd be keen to get your views on this, because it's just mentioned about, we can't move, I think it was Ian who said, we can't move offshore oil and wind, oil platform to being a wind turbine, overnight. And of course, that's more than true. But the oil and gas industry can do so much to improve its climate credentials. And in this big squeeze for big oil, the question is it doing enough? McKinsey had some stats coming out saying that making use of advanced connectivity, optimizing drilling and production and throughput, and maintaining the maintenance could add up to $250 of value to the oil and gas industry's upstream operations alone, just that part of the value chain, by 2030, and a staggering 72% of that 250 billion total could be realized with the sector's existing infrastructure. So that screams opportunity to the layman. From your perspective, how to fully utilize this, and is it being fully utilized, this potential?
I think it's certainly not being fully utilized. The oil majors are. You only have to look at the television and watch where they put their advertising money. That it's quite clearly about green transition energy. I think I saw one stat which said that about 1% of the oil majors' R&D is actually going into the energy transition proper, but 99% of its PR budget was going into talking about that element. It's very easy to be cynical. In fact, it's hard to be anything but, because the inertia of those industries is so enormous. I think they are frightened by the idea of their stranded assets. The idea that their stock could become worthless, that it might be overvalued by orders of magnitude, is of
just
real.
To interject there, it's understandable that they're scared, because estimates are over $1 trillion in terms of current risk for stranded assets. If we stick to those climate targets by mid-century without dramatic changes to energy efficiency, to digital applications.
That you just simply do not want those stocks in your pension fund, because they could evaporate. It could be like holding tulip futures in the 1600s in the Netherlands. I think that it would be foolish to attempt the energy transition without the engineering expertise of the oil and gas industry. But they need to take a leaf out of what Ørsted did in rebranding from being, rather than this kind of natural decline that they seem to want to be talking about.
I think that it makes a good point in that digital oil and gas, in my prior life to Rise Energy, I was at Accenture Strategy. We worked on digital oil and gas. Digital oil and gas was one of our key drivers in the Middle East. And what it does is it lowers operating costs, it facilitates resiliency, and what it can do is it can enable a more efficient company, but that just drives a cheaper production of oil price. That won't drastically reduce emission targets. And so where I see the balance being struck is, Ørsted, but Equinor as well, the former Statoil, former oil giant turned green energy leader. Now their first quarter results showed more renewables revenue than it did oil and gas revenue. And so when you talk about those rebrands and that change in mindset, I actually, to give a positive on the oil company spin, is that these companies have massive opportunities with the expertise, experience, infrastructure to change the game. And I guess that's what it's all, I feel, building up to, is the societal pressure, the government pressure, the corporate pressure for them to make these changes and to be the leader in the future energy. You even see Total becoming Total Energies just this week. So when I think Faris talked about 10 days, if we stretch that to 2 weeks, we've got rebrands, we've got shareholder revolt, we've got court appeals. I mean, this has been a massive 2 weeks,
but it's also all about that crunch. It's all of the big oil crunch, and that they're being pushed into a corner. Some, of course, have been proactive. It's very hard to talk about this without putting a blanket statement and damning everybody. Of course, there have been those who've been very proactive, and some of the technologies and digital applications that we see in the energy sector have gone into crossover technologies, and many other sectors benefit from them as well. So there are certainly shining lights in there. But Faris, in your role as a business transformation lead, do you think we should, or we will, we should, but will we see a big rise in the digital sophistication and digital savvy when it comes to big oil in the next year? Because obviously Ian's just talking about these pressure points, which are there and they're growing, but to have to be shoved into the corner with it seems a shame. It's a missed opportunity when there could have been a lot more proactivity.
Yeah, so it's interesting that you cited McKinsey. You have to understand a lot of, and I have to, with a caveat that most of these individuals I went to university with, or I was embedded in their teams at one time. I have to say that the drive to sell lower unit costs usually comes from wanting to sell your consultancy business too. You're basically trying to put a carrot in front of the oil and gas executives, and they're trying to chase the carrots. And if you look at like the state of some of these fields, not all of them are ready for edge technology, 5G investment. Do you
think that they should be ready by now, though? Because Ian was just talking about these pressure points, and digital technologies aren't new. So the argument more is that they should be ready, or certainly be well on the way to being ready, so that these applications can be installed. Not all of them, some are new, but some others that are more established.
So Michelle, this is the deep paradox of it. When I started talking about among my colleagues about 6-7 years ago about stranded assets, they all looked at me like I was an alien from outer space. But now, understanding the mindset, you see that whenever the barrel of oil goes up, innovation even slows down even more than usually, because it's such a profitable industry.
Of course.
The incentive to put your effort in restructuring data gathering, data analysis, machine learning, AI, predictive maintenance, all that good stuff that really does increase, as Ian said, operational excellence, resilience, safety, all those things. That takes a lot of effort, and it also takes investment. I mean, if any operator in the region wants to change their entire infrastructure into a 5G ready infrastructure, we're talking about in the order of hundreds of millions of dollars investment on that one component alone. Forget about modernizing the wells and everything else that goes with it, and retraining the staff. So we're talking about in totality billions of dollars in investment. So I would assume if there were some strategic considerations. They will be asking the question at which stage supply and demand, as Nathan said earlier, come to interplay where, you know, they might be putting more of their focus into solar, hydrogen, onshore wind, especially in the region where you have some of the highest density on the solar density planet. So they'll be starting to look for the things where the R&D in China and North America and Europe, they can bring it in and try to really develop it and take advantage of it there, because those costs have come down significantly over the last decade, 40 to 80% over the last decade. Yeah. So
yeah. And those efficiencies from digital oil and gas,
they answer, please, and we'll see what everybody voted. Agree. Okay, interesting. It's even starker than I imagined. Ian, is that what you anticipated in terms of the reply?
Yes, I think so. I mean, to be contrarian in what I said, you know, they have an opportunity. There's a major opportunity, and just on Faris's point, there is this inflection point between adding digital to your oil and gas facilities or transitioning, because they're not one of the same. You're either driving a cheaper oil price or through efficiencies, but with massive investment, as Faris said.
But arguably, if you're generating greater returns because you've invested in that efficiency and over the years you're doing better for it, I guess one argument could be that money should then be getting invested into climate tech and education for your company. And
you're doing the wrong thing better.
But Michelle, that is a great point as well, though. I mean, lower oil price, more investment into green, but that has to be your mandate and your strategy.
And right now it's not for most. Is that fair to say?
I think we're seeing a big change, and I loved Nathan's 1% versus 99%. We're seeing big talk, you know, of let's see some action, perhaps.
Let's see, yeah, some strutting down the street. I think it's time for that. Nathan, what's your take, please, on the result of that survey question and what Ian just mentioned?
Yeah, I completely agree with it. I'm not surprised to see that kind of shift at all. We are in an echo chamber, of course. We remember that. There's a lot of people out there who still don't believe either that it's necessary or that it's possible. The reality is that it is. We probably need to sort of we progressives, people who want to see change. We need to be engaging with the opportunities out there in the green transition, rather than focusing on doom and gloom and the messages of what we've lost, or the fact that we should have done something different 30 years ago. Yeah, it's done, it's over. Let's build a better future.
Indeed, let's crack on. Faris, final comment to you just before we wrap up. Should we be optimistic for the rest of the year? Should we put our hearts on the line and expect to see some more positive progress in terms of the digital turnaround, in terms of the investment in climate tech, in terms of the more ambitious climate targets as well? Is that fair to say? What would you say?
I think so. I saw a really interesting article, and I'll post it. I don't know if it's possible to post it in the chat here, but I mean, if you see what the Department of Energy in the States is putting their money in, I think they've got this hydrogen shot program where they want to lower the cost of hydrogen down to $1 per kilogram by the end of the decade. And at the end of the day, humanity wins, right? Wherever that R&D comes from, because all of these alternatives and renewables can be developed locally nearly anywhere on the planet and can be exported nearly anywhere. So everybody wins on some shape or form. It's just that individuals need really to get their house in order in terms of what they're saying to the public and what they're really doing internally in the organization, in their respective organizations. Yeah,
indeed, because these allegations of greenwashing are not healthy for anybody. Their reputational value, the public's faith, investors' confidence, they certainly don't help anybody. And oil and gas is a huge ship, and it, of course, is going to take time to turn it around to a lower carbon future. But at the same time, it sounds like the engines need to start turning a lot faster and soon as well. Faris, thank you very much. Ian, Nathan, thank you very much to all three of you for joining us today. It's been a great discussion. I hope to see you again soon.
Pleasure.
Thank you.
Thank you very much.